Imagine holding a verified green tech patent valued at $50 million. The technology is proven, the market demand is clear, yet the inventor is entirely unable to secure the venture funding needed to move forward. The asset is physically there, but it is economically stagnant. Across town, the situation is reversed. Local banks are holding massive reserves of SBA loan capital. These institutions want to lend, yet they are constantly denying viable businesses because the paperwork isn't up to standard. Both scenarios expose a specific market vacuum. Having a groundbreaking idea or a functional business isn't enough to secure capital on its own. To bridge that gap, you need venture architecture. This is the specialized infrastructure of financial models, investor-ready pitch decks, and market research required to translate a raw concept into a funded asset. Without this specific strategic bridge, high-value intellectual property remains a static prototype in a vault, and available capital stays on the bank's balance sheet. Outcalt Performance Group was designed specifically to address this capital bottleneck. As their strategic blueprint shows, the firm has evolved beyond its origins in sales training and coaching. They now operate as a specialized strategic advisory firm. Their focus is now the engineering of investor narratives and strategic blueprints, the components that drive business growth and facilitate successful exits. For modern founders, generic business coaching is no longer sufficient. They require a partner capable of building the technical infrastructure that commands market attention. But how does a single firm deliver complex strategic architecture faster than a traditional consultancy? Their advantage is a synergy between Eric Outcalt's 40 years of direct response sales mastery and cutting-edge AI. This combination allows for a rapid speed to market. High-quality strategic assets that usually take months to build are now completed in just a few days. AI manages the massive datasets and maintains executive-level precision, while Eric's deep understanding of customer psychology ensures the resulting documents are persuasive enough to close. This creates the Cayenne Service Suite, high-value deliverables specifically engineered to secure investor interest. This hybrid approach replaces the slow, manual processes of traditional advisory with authority and rapid execution. One primary application of this architecture is the patent-to-profit strategy. This targets inventors in high-growth sectors, like biotech or EV, who hold valuable patents but lack the business models to commercialize them. Outcalt builds the missing links, a custom strategic ROI model and a Tier 1 outreach plan designed to engage global buyers. This prevents raw intellectual property from being exploited or undervalued, transforming a patent into an investor-ready asset. A second strategy targets the inefficiencies within small business administration loans. Loan officers often see viable businesses fail to get funded simply because their business plans and financial projections don't meet strict bank standards. Outcalt partners with these lenders to transform insufficient documentation into compliant, bank-ready packages in 72 hours. This rapid turnaround allows banks to deploy their capital and founders to secure the funding they need to scale. Finally, Outcalt serves as a partner for experienced operational leaders, like fractional COOs. These executives are often managing multiple companies and don't have the time to build investor-grade financial models from scratch. Outcalt acts as a white-label strategic engine. They handle the intensive market research and model building behind the scenes. This allows operational leaders to increase their client impact without adding dozens of hours to their own workload. Across every sector, the effect of proper venture architecture is the same. A raw patent becomes a scalable business. A stalled loan application becomes funded capital. The raw idea is structured for the market. Standard business coaching focuses on founder behavior, but it cannot produce the technical ROI models or the compliant financial forecasts that institutional lenders and Tier 1 buyers demand. In today's market, commanding a high valuation requires strategic assets that are built with both AI-driven data and psychological precision. Business growth and maximized valuation are not accidental. They must be meticulously engineered, modeled, and architected to close.